I'm Kisha Parker, owner of Healing Pathways Counseling and Consulting LLC. She Rocks Property Solutions LLC. She Rocks Luxury Housing, and She Rocks Real Estate. I want to talk with you about the legal and financial aspects of starting a business. The first part that I'm going to talk with you about is selecting the appropriate legal structure of the business. There are different types of structures that you can use to start your business, and it's important to pick the appropriate one because it affects how much you're going to pay in taxes. It also affects your ability to raise money. It affects the paperwork you're going to file with your state, and it affects your personal liability. You need to choose the business structure before you register with whatever state you're going to be doing business in. And you will also need to get a tax ID number, and that's something you're going to file with the IRS. You can go right to their website after you file your business structure with whatever state, and they will assign you a EIN number, which is what you're going to, a social security number for your business structure. And you'll also need to get whatever licenses and permits afterwards as well. Choose carefully what business structure you're going to do because later on you might want to convert it into something else, and that's going to affect how you pay taxes. I also want to say before I get started, I am not an attorney. So if you want to know for sure how to do this in the most appropriate way for you, please contact an attorney who is licensed to practice law, business law in the state that you're going to be doing business in, okay? All right. There are also business counselors. The SBA, the Small Business Administration, has some of those too. You can also talk with an accountant, and that can help you. One type of business structure is a sole proprietorship. It's pretty easy to form, and it gives you complete control of your business. You're automatically considered to be a sole proprietor if you don't register a business, but you're doing business. So if you do business activities but don't register as any other kind of business, you are considered a sole proprietor automatically, okay? Sole proprietors do not produce a separate business entity. This means your business assets and liabilities are not separate from your personal assets or liabilities. That means you can be held personally liable for the debts and obligations of the business. You're still able to have a trade name, so if you want to call it Kisha doing business as Soap Suds Cleaners, if that's what you want to do, you can still have a trade name. You're just not a separate entity. It can be hard to raise money because you can't sell stock, and banks are hesitant to lend to sole proprietorships, just FYI. It can be a good choice for low-risk businesses and owners who want to test their business idea before forming a formal business. So if you're just starting out, you don't want to have a big thing, a big to-do, this might be a good structure for you. Partnerships. Partnerships are the simplest structure for two or more people who want to do business together, or two or more businesses who want to do business together. There are two common types of partnerships. There are limited partnerships and limited liability partnerships. Limited partnerships have only one general partner with unlimited liability, and all other partners have limited liability. So I'm going to say that again. Limited partnerships have only one general partner with unlimited liability, and all other partners have limited liability. So I hope I said that right. One more time. Limited partnerships have only one general partner with unlimited liability, and all other partners have limited liability. The partners with limited liability also tend to have limited control over the company, which is documented in partnership agreement. So in the agreement, it'll have all that documented in there, who has unlimited liability and who has limited liability. Profits are passed through to personal tax returns, and the general partner, or the partner without limited liability, must also pay self-employment taxes, okay? This is your business with the IRS. Limited liability partnerships are similar to limited partnerships, but give limited liability to every owner. An LLP, which is a limited liability partnership, protects each partner from debts against the partnership. They won't be responsible for the actions of the other partners. Partnerships can be a good choice for business with multiple owners, for professional growth, like attorneys, and groups who want to test their business idea before forming a formal thing. So if you want to do business with some partners and you just want to test it out, this could be a good way to do that instead of establishing a corporation. A limited liability company, an LLC, which is what I have, lets you take advantage of the benefits of both the corporation and partnership business structures. LLCs protect you from personal liability in most instances, and your personal aspects, like your vehicle, house, savings account, won't be at risk in case your LLC faces bankruptcy or lawsuits. So if Healing Pathways, She Rocks Property Solutions LLC, She Rocks Real Estate, which is also an LLC, if they go under, if they go bankrupt, or if someone wants to sue them, my personal assets won't be necessarily tied to that and will be protected because I have an LLC. So that's what this is for. Profits and losses can get passed through to your personal income without facing corporate taxes, depending on how you have it taxed. We'll talk about that in a minute. However, members of an LLC are considered self-employed and must pay self-employment tax contributions towards Medicare and Social Security. LLCs can have limited life in many states. When a member joins or leaves an LLC, some states may require the LLC to be dissolved and reformed with new membership. That wouldn't necessarily be the case here because it's just me, unless there's already an agreement in place with the LLC for buying, selling, or transferring owners. So if there are more partners involved, or more members, I should say, in an LLC involved in your LLC, then this would apply there. But since it's just me, this doesn't necessarily apply to me just as a single LLC member. It's almost like a sole proprietorship. It's just taxed a little differently. So if you want to transfer owners, it would be the same way as doing it with a corporation if an LLC were to dissolve and had multiple members in it. So we're going to talk about corporation next. A corporation is sometimes called a C Corp, which an LLC can be called too. I don't want to confuse you. We'll talk about that in a minute. Is a legal entity that's separate from its owners. So corporations can make a profit, be taxed, and can hold legal liability. It can be held legally liable. Corporations offer the strongest protection to its owners from personal liability, but the cost to form a corporation is higher than any other structure. Corporations also require more extensive record keeping, operational processes, and reporting. So it's a bit more intense than the LLC or the LLP or the sole proprietorship. Unlike sole proprietorships, partnerships, and LLCs, corporations pay income tax on their profits. In some cases, corporate profits are taxed twice. You want to keep that in mind. First, when the company makes a profit, they're taxed, and then they're taxed again when the dividends are paid to shareholders on their personal tax returns. Corporations have a completely independent life separate from its shareholders. If a shareholder leaves the company or sells his or her shares, the C Corporation can continue doing business relatively undisturbed. So it's not like an LLC where it may be required to be dissolved and then start all over again. Corporations have an advantage when it comes to raising capital because they can raise funds through the sale of stock, which can also benefit in attracting employees. So if you have a company like my real estate brokerage allows us to have some buy into some of its stock, that's one of the benefits of having it and being a corporation. So corporations could be a good choice for medium or high-risk businesses that need to raise money and businesses that need to go public or eventually be sold. So that's a C corporation. An S corporation, which is what I have my LLC taxed as, sometimes is a special type of corporation that's designed to avoid the double taxation drawback of regular C corps. So S corps don't get doubly taxed. They don't get taxed twice. S corps allow for profits and some losses to be passed through directly to owners' personal income without ever being subject to corporate tax rates. So again, this is different because it's taxed different. And all of these are kind of taxed differently, and that's the main thing that you will notice, the main difference that you will notice between these. Again, talk with a tax professional or an attorney who knows a lot about business in the state that you want to do business in to know which one of these you really want to go with if you're not sure, okay? Not all states tax S corporations equally, but most recognize them the same way that the federal government does for C corps. They're taxed differently, but they're recognized the same way as C corps. S corps must file with the IRS to get S corp status, a different process from registering with their state. So you got to register, but you also have to file with the IRS as your corporation as a C corp. So if you wanted to be taxed as a C corp or an S corp, then you have to file to say which one it's going to be with your state. There are special limits on S corps, and I think if you're going to file as an S corp, you have to do that by March the 15th. You might want to check me on that, not the regular April 15th deadline for taxes. So you have to file your taxes a month earlier to get taxed as an S corp and not doubly taxed like you would if you were a C corp. So keep that in mind as well. Check the IRS website for the eligibility requirements. You'll still have to follow the strict filing and operational processes of a C corp. You'll just be taxed differently. One more thing about S corps is they also have an independent life, just like C corps. If a shareholder leaves the company or sells his or her shares, the S corp can continue to do business relatively undisturbed. S corps can be a good source of business that would otherwise be a C corp, but meet the criteria to file an S corp. A B corp, which is not something I hear about commonly. A benefit corporation, which is what a B corp is a for-profit corporation recognized by the majority of the U.S. states, but it's a B corp, and it's different from C corps in purpose, accountability, and transparency, but aren't different in how they're taxed. They're driven by both mission and profit, and the shareholders hold the company accountable to produce some sort of public benefit in addition to a financial profit. Some states require B corps to submit annual benefit reports that demonstrate their contribution to the public good. There are several third-party B Corp certification services, but none are required for a company to be legally considered a B Corp in a state where the legal status is available. A close corporation, which is the next type of way your business can be structured, resembles a B Corp, but has less traditional corporate structure. These shed many formalities that typically govern corporations and apply to smaller companies. State rules vary, but shares are usually barred from public trading, so you can't trade these publicly, not the shares. And closed corporations can be run by a small group of shareholders without a board of directors, okay? A nonprofit, and this is the last one that we'll talk about. There's a couple more, but they're not really, there's a cooperative, basically. And then you can also combine different business structures and get taxed differently and that sort of thing. But the last one we'll talk about today is the not-for-profit. A lot of people want to know about this, and I suppose I suggest that you get an attorney for this as well. If you don't know a lot about not-for-profit, before you get taxed a way that you don't want to be taxed or you end up in some tax trouble, please contact either the SBA, Small Business Administration, or get an attorney or an accountant who knows about these business structures, particularly within not-for-profit business. So, obviously not-for-profits, everybody knows, well, most people know that they don't pay state or federal income taxes, or on any profit that it makes, does it pay any taxes whatsoever. It's exempt. They must file IRS exemption, and it's a different process from registering with your state. So yes, you have to register your not-for-profit corporation or business with your state, but you also have to register that or file for exempt status with the IRS. So you go right to their website and do that. From there, I think there's a cost about $275 it was. You might want to check that. But you have to, it's two things you have to do. You got to file it with your state and then your Secretary of State. And then you also have to get on the IRS website and file for exempt status for your not-for-profit. Not-for-profit corporations need to follow organizational rules, very similar to a regular C Corp. They also need to follow special rules about what they do with any profits they earn. So you got to account for, what are you doing with this money? What are you doing with the profits from whatever you're earning or bringing in from fundraisers or whatever else? For example, you can't distribute profits to members for any political campaigns. So you can't distribute any profits to any members, but you also can't distribute it for any political campaigns either to help anybody out in politics. So those are just some of the rules. You need to know what the rules are. Those are important because you can lose your tax exempt status if you break them, okay? Not-for-profits are usually called 501c3 corporations. They're referenced to the section of the Internal Revenue Code that is most commonly used to grant tax exempt status. So this concludes the different types of business structures you can actually form, for my section anyway. Again, there's a cooperative that you can form. It's usually owned and operated for the benefit of using its service. So you can look that up if you'd like to, but these are the main ones. So again, I am not an attorney, but I just wanted to give you an overview of what this may look like and help you to understand which one you may or may not need to be looking at to get started for your business, all right?